Most people think they have one credit score, like one final grade. But that is not how credit works. You may have many credit scores. Different apps, banks, car dealers, mortgage lenders, and credit card companies may all check different versions. So if your numbers do not match, take a breath. That is normal. Here's what you'll learn in today's class. Discover why you have multiple credit scores, understand the 3 major credit bureaus, learn the difference between FICO and VantageScore, see how loan types affect your scores, and find out why timing can change everything. Let's get started. Here are some key terms for this lesson. FICO, a popular credit scoring system used by many lenders. VantageScore, another credit scoring system often shown by free credit apps. Score model, the math formula used to turn your report into a score. Score version, a specific edition of a score model. Mortgage score, a score version often used for home loans. Auto score, a score that helps auto lenders judge risk for car loans. Bank card score, a score used by some credit card companies to judge credit card risk. Now let's jump in. There are 3 main credit bureaus. A bureau is a company that collects credit report information. The 3 big ones are Experian, Equifax, and TransUnion. Your information may not be exactly the same at each bureau. One card may report to all 3. Another may report to only 1 or 2. That can change your score. A score model is the math system used to turn your credit report into a number. The 2 names you hear most are FICO and VantageScore. Many free apps show a VantageScore. Many lenders use FICO scores. Both look at your credit, but they do not grade it in the exact same way. Even inside FICO, there are different versions. Think of it like phone software. An older phone and a newer phone may both work, but they do not act the same. Lenders may use older or newer scoring versions. Mortgage lenders, for example, often use special FICO versions that may be different from the score in your app. A lender is not always asking the same question. A mortgage lender wants to know how risky you look for a home loan. An auto lender wants to know how risky you look for a car loan. A credit card company may use a bank card score. These special scores may weigh your history a little differently. Credit scores can change because timing changes. Your card balance may update after your statement closes. A payment may not report yet. A collection may appear at one bureau before another. Checking your score on Monday and applying on Friday can show different numbers because your report may have changed in between.